Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, is tomorrow's federal budget likely to have much enough of an effect on the property market? Will Victoria's new underquoting laws change anything, or will it be business as usual? And who is the lucky winner of a free $400,000 apartment? Well, the CoreLogic Hedonic Home Value Index data for April reported that dwelling values increased by 0.1%, the slowest month-on-month growth conditions since December 2015. So have we reached the top of the property market, and what might this indicate for the market outlook for the rest of the year? Well, joining me tonight to give his opinions is Charles Tarbey, Chairman and owner of Century 21 Australasia. And just jumping straight from your radio show, you're a media mogul these days, Charles.
I call it something else which I can't pronounce. Yeah, it's a great show. We just do a talking lifestyle show. It's a talking lifestyle channel. Goes all the way down the eastern seaboard, 7 to 8 o'clock. And the good thing about it, I've really found very interesting, apart from talking about general real estate and what's happening, is that I'm phoning 2 franchise owners from different parts of Australia every week, because some people might not have heard of Mawson Lakes that we spoke about today, or they might not have heard of a suburb like Ellenbrook in Perth, and wonder what's going on, because all you ever hear about is Sydney, Melbourne, Sydney, Melbourne. So I thought it'd be great to introduce these people on and tell us their story. And there's a young producer on 2UE, I'll talk to him, his name's John. He every time he watches the show, he snaps up, right, I'm buying in Hobart this week. Today it was Mawson Lakes in South Australia is where he's going to buy. So you start to see that Australia is a really broad real estate market when you just stop talking about Sydney and Melbourne. And
again, I guess with these CoreLogic data that we're talking about tonight, that's the thing is you only see a tiny little snapshot, and when they talk about Sydney or Melbourne, it's the whole of Sydney or the whole of Melbourne. It's not those little things. So again, I guess you'll see that with your agents all the time, that you're getting lots of different messages.
It's really incredible, because at one minute you've got people announcing these record sale prices, and then you talk to somebody else 5 minutes later and they talk about a property they can't sell that the people want to sell, but the debt on the property is now more than what the property's worth. And it's really incredible, because you see all these posts on Facebook about this incredible success, and a lot of people don't talk about the really massive failures that are going on out there.
And again, when they talk about the Chinese and some of the record sales in Australia of kind of 50, 60, 70 million dollars, we were in Guangzhou a few weeks ago in China, and then they've got whole apartment blocks that are selling for 30 or 40,000 a square metre, so $50 million penthouses, but they've got a whole stack of them. It's not just these one single ones. So then you can see why the Chinese can afford to pay these prices, because that's just, oh, we'll sell another couple of units and we can afford another $50 million one in Sydney.
Yeah, go for a drive, get a driver to take you through the streets of Hong Kong, and you'll start to realise when they talk about how expensive Australia is, and you see 20 square metre or 30 square metre apartments.
And they're looking at muddy rivers versus blue ocean.
Selling more than the median price of a property in Sydney. It is extraordinary.
So let's get back to the CoreLogic. So what do you see in those figures of 0.1%?
Yeah, well, it's still pretty good in my view. I mean, Sydney itself is still growing, and I expect it to. One of the things that came out of that figure was Hobart. Hobart had some good growth, 5.3% growth, which is really quite considerable. I keep talking about the halo effect or the wave effect that's hitting places like Tasmania, because people in Melbourne or Sydney have gained this massive equity that they didn't have before, and none of those properties look really cheap. And so I think that there's that movement still happening. And one of the guys we spoke to tonight was a guy called Brian Nancaro, and he has the office in Canberra. And he said that their boom started in 2016. He says there's been a lull for all this time, and now all of a sudden there's this growth occurring, and they can't keep up with the demand. So I think, again, it highlights the 1,000 different marketplaces we have in Australia when you look at those figures.
And are you finding a trend that you say a lot of people have made the money in Sydney and Melbourne, so are they downsizing and getting some cash out, or are they buying kind of holiday homes and second properties?
Well, both, and absolutely both. And I've noticed it with people buying, and again, this is something we really touched on heavily, it would have been over a year ago, people discretionary spending, buying their boat or buying their holiday home. And I've noticed an increase, in my area where I have my investment property down the south coast, where people are buying all of these little small villas and cabins and whatever else because they seem cheap now. And of course, there's still responsible lending. You've still got to have the ability to repay. But hey, it does look a lot better than what it used to look.
Now, I'm always a bit of a sceptic with the media talking about these figures and daily figures or weekly figures because I think there's so many things that can skew them. And Tim Lawless from CoreLogic, he addressed one of the issues that could be because we had the Easter weekend and also we had the other public holiday with Anzac Day, that suddenly if you lose 2 weekends out of a month, then that really can affect the data as well.
It can. And when we look at the clearance rates a little later on, you'll see that they're still moderately successful and we're certainly not in a downward spiral in a way that it has been spoken of. The truth is, at the end of the day, though, Chris, there are marketplaces in Australia that have already crashed. We talk about top of the market. Some of them have gone from the bottom to the top and they're now back to the bottom again. But the focus seems to be on these two capital cities mostly and clearance rates. And what people have to really accept is that clearance rates represent a small portion of the overall number of transactions that go through. And that's the part. But they're basing their information or basing their decisions on what I think is reasonable data, not enough data for me to want to run out and make a decision on.
And so where you get places like Hobart that's gone up...
But we're still going to talk about it later on, right?
So where you've got places like Hobart that have gone up 5.1% in 3 months, do you read into that, right, that's kicking there, let's jump in and let's try and, like the shares, go for the peaks and troughs, or is it too late? They should have done it
Well, my mistake, I think I said 5.3 earlier, so it's 5.1. I think it is a result of that already having happened. People jumping in and moving down through there. You can buy and again, one of the round the grounds that I did with one of our franchise owners a couple of weeks ago was James Leslie from Devonport office, and I think I mentioned it to you once before, and he was saying that you can buy properties, brand new properties, sub 300,000, 260 to 280,000. Brand new homes. You can get the boat from Devonport to Melbourne, or a flight as quick as a flash, and you're sitting in the city of Melbourne. So I think a lot of investors who haven't been able to get into marketplaces that they want to get into will look at areas like Adelaide, they'll look at areas of Tasmania, and certainly areas of southeast Queensland, which is probably getting advertised too much. So I'd be more inclined to talk about south east Melbourne before I talk about southeast Brisbane at the moment.
Because in reality, how many people will move? Because, again, to bring it closer to home, then in the GFC, lots of people said to me, the UK's down maybe 30 or 40%, and again, it's only in pockets, it's not all the places. Say, why wouldn't you invest over there? Well, just because suddenly the UK's cheaper because of the exchange rate or whatever, I'm not suddenly going to move my life to the UK where there's whinging palms, it's cold and wet and dreary, when I could be in Australia. Sure, it might cost me twice as much to buy a home.
I'm glad you
But I'm not going to move to the other side of the world.
And I'm glad you said that. And they get a little bit arrogant when they have their 5 days of summer too over in the UK. But I think that, more importantly, I get nervous about buying a property in another state, which you can do safely in Australia, let alone in another country. And yes, you might do really well, you might hit it, the dollar might change, you could buy in the US and the Australian dollar could drop significantly and you're going to make a killing. But that's risky real estate. I'm not big on advising people to do risky real estate.
Yeah, and if you're going to do it for the foreign exchange, go and buy a foreign exchange product, don't go and use property to go and play the dollar.
Yeah.
So
yes,
that's the main thing.
I agree.
Well, let's have a look at the clearance rates and some of your numbers.
Yeah, they've been really interesting because the actual auction clearance rates weren't as bad as we think they were, Chris. I looked at them this time last year and they were 67.5% this time last year, but this week they're at 74.3%. So, that's a pretty good movement as far as I'm concerned. And I think if you look even more so at the specifics, and that's going back to Sydney. Sydney came in at 77.8% clearance for the week, and Melbourne came in at 78.4%. So, again, really not that bad. But I think that people need to again, not focus too heavily on that and recognise there is a bigger marketplace out there than Sydney and Melbourne. Because if I take you to Perth, the clearance rates in auctions was incredibly low. If I take you to Brisbane, they actually had a good week at 60.8, but they are generally in the 45s to 50s. But we don't talk about them. So we always seem to talk about those ones at the very, very top end, and I think that's the important thing. But I think we could talk about more so auction clearance rate. We could talk about an apartment giveaway too at some point in time. So
yep, we're going to do that later on. Yep.
So I just happen to have a little check in my pocket that I want to flash.
We're going to do that at the end of the show.
Thank you very much.
So don't you worry. But no, it's true what you said, because I spoke to one of the agents during the week who's probably one of the most successful in the eastern suburbs, and he was saying investors are completely out the market from his perspective. But then we were saying, yeah, but what about the $1 million ones? And he said, oh, look, there is no more of those properties, so there's lots of people there, but there isn't investors at maybe 2 or 3 million.
Yeah.
So again, it very much depends on what price point you're in and which market.
It's incredible to think that people are investing in real estate at 2 to 3 million.
Yeah.
Investing.
To me, it's madness.
And then you
never do
hear
it.
about the young couples buying their first home and they're paying 1.4, 1.5 million. It's a very different world. And again, I encourage people to look at the broader statistics around the country and not get too heavily focused on 2 capital cities.
Exactly. Well, let's move on to homes advertised for sale.
We have an increase. First time in ages. It's only a modest increase. It's only 0.15% increase. But nonetheless, it's still an increase. And when you look at going back 4 or 5 weeks ago, it was a massive 12.1% increase, then it was negative. And every time before I come on the show, I think, oh, Chris is going to be disappointed in me again because I'm going to tell him. And I looked at the figure and I saw a negative, a 0.58%. And I thought, oh, this is not good at all. I'm going to have to talk about, but that was another number. And so I was corrected by one of my team today and said, no, it's a plus 0.15% increase. So about 3 new listings came on extra this time last week.
But I was speaking to one of our guys today, and he's got 5 or 6 off markets that he's trying to deal with at the moment, and the clients are saying, well, what changed since last week? And I said, nothing. The wind changes, and then just suddenly there's more come on. So it's very hard to read into this
It
stuff.
is, and we're coming into, if you go back to traditional real estate, this is a time when listings drop coming into winter. So if we start getting a slight increase, which would be interesting to see, that is a definite reversal. A definite reversal.
Let's jump into the rent price movements.
Yeah, they've been pretty interesting. Negative 0.23% over this time last week. When we talk about the charts, and I love keeping these records for a long period of time now, 24 months and more later since I charted one of these rents, the rent has increased on average across Australia 3.23%. So it hasn't been a massive change. The areas that have gone backward this week have been Perth and Darwin. Again, they're still battling away. Hobart had a modest increase, but the rest of the capital cities were fairly average in the rent movement.
And then just finally, we'll go through the vacancy rates.
Yeah, look, Chris, Sydney's outstanding, 0.41% vacancy rate. How do you beat that? I mean, that's just barely enough time. That 0.41% is enough time to put something in the market and take it off. Melbourne came in at 1.09. Perth climbed. They were sitting in the high 7s, 7.85 last week, 7.78 the week before. This week, they came in at 8.88. So I'm not happy about that because it's a climb. It's not up to the 10s where it was 5 or 6 weeks ago, but 3.46 average between those capital cities. So if we can keep it in the mid-3s and start to bring it down to the high 2s, I'm going to get pretty happy, and so will landlords, I guess, be. Tenants may not be. Sydney tenants should not be happy.
All sounds good. Now, join us after the break when we find out who has won that $400,000, care of Charles Tarbey. We'll be back soon.
Your screen is your window to the world. So why wouldn't you want one that's virtually borderless? One that stretches from edge to edge, with millions of pixels worth of detail any way you view it. There are no limits to where it can take you. The Dell XPS 13 2-in-1 with an infinity edge display. As real as it gets.
Running a business is one thing, getting it online is another.
I know I need an actual website, only I'm no expert. Still, I'll get by. Jim!
Yeah.
Customer.
Right.
Faster, Jim.
Building a website with GoDaddy is so simple, even your dad can do it. GoDaddy.com.au.
Does your investment property insurance cover damage caused by tenants? Terry Shear Landlord Insurance includes cover for damage by tenants and loss of rental income as standard. Call Terry Shear, Australia's leading landlord insurance specialist, for a quote.
Every day, hundreds of thousands of us head off to jobs that help build this country. And all of us want something to show for it. Over the last 32 years, Cbus Super has achieved an average return of over 9.16% per annum, with investments in projects that help create jobs. For all of us, Cbus.
Kia Sorento is tuned for Australian conditions. It's been tested on the harshest of roads, from inner city to outback, so that ride and handling is second to none. Kia Sorento, it's made for Australia.
Cruise Europe's rivers in style for less. Evergreen's 15-day deluxe river cruise from only $5,145. Early bird deals won't last long. Hurry, call your Evergreen expert today.
QuickBooks introduces Jeanette and her new mobile wedding business. At first, getting paid was tough, until she got QuickBooks. Now she sends invoices, sees when they've been viewed, and ta-da, paid 2 times faster. See how at quickbooks.com.au.
Here's your new Golf.
It's hard to let go of a good thing. The Golf Run Out, yours from $22,990 drive away, plus an impressive $2,000 factory bonus.
Volkswagen.
The French election is one of the most critical events this year for European stability. We'll go live to Paris for what markets are making of it with Star Force Ken Curtis and speak with French national and novelist Lucy Michaud. Join me, Sky News Business.
Welcome back to Your Property Empire. Well, a recent report from Anglicare found chronic shortages of properties were getting worse, and that people on low incomes could no longer afford to rent in major cities. So, do we believe that capital cities are becoming harder and harder to rent in? It's got to be an obvious question, isn't it?
Yeah, and I don't think it's all of them, though, Chris. Certainly, as we spoke about, there are some long-suffering capital cities in Australia where they do have plenty of properties available. But you're right, but it's not. It's the entire population that's suffering in places like Sydney and Melbourne, in certain parts. And it's very difficult for a lot of young couples to get. So we talk about, hey, you know, go and buy where you can afford and rent where you want to live. Well, gee, that's getting impossible too, because the rents are going through the roof. Even though the yields are low because the prices have increased, it's still very difficult on the average.
The rent's still actually physically high,
the rent's
even
still
though
high.
the percentage is low.
And these guys got to work hard to keep it together. And if they happen to buy an investment property and put a tenant in there, and then they have an issue where a vacancy occurs, which is highly unlikely, but it could happen, then they're going to be under a lot of stress. And I think there are quite a few people sitting on the fence right now suggesting that it might be time to wait, because that mortgage stress might kick in, the interest rate might move up, the prices might come down, people might feel under pressure. I can't see it in the immediate future. But I think that's the biggest issue. And again, it comes back to supply. And that supply issue, we were talking about it earlier on, myself and Tim Lawless, who you mentioned. The issue of supply is a major issue, and the federal government can't do anything about it. They can only talk about it because it's political, but it's really got to come back to the state and local governments to get off their backsides and try and work out some way to increase the supply issues. Some of them have done it fantastically, and some other state governments can learn from places like Victoria and South Australia.
Now, on a positive, though, is the social stigma of renting is going now, isn't it? Because the rent vesting thing, and I always say on my show, I'm still a renter. I've got a lot of property. I'm still happy renting because certain types of property it's cheaper in percentage-wise. So that's not necessarily such a bad thing for the young people these days, is it?
No, it's not. It's absolutely not at all. It's quite acceptable in most parts of the world. Renting is really what people will do. It's just that Australia's built this story around home ownership and that having your three-bedroom brick house on your block of land has been the Aussie dream, and I think that's been drummed into people for a long time. I drummed it into my children about buying property, and I still talk to people of my generation who are trying to get their children trying to get their children into real estate. So the story's still there, but it's a lot more acceptable now to rent property.
But rent money's only dead money unless you invest in something equivalent.
You've got to have something on the go, and that's the hardest part. It might have to be in the equity markets. It might have to be a co-ownership with other people of property. But you have to get somewhere into the investment world. And again, I encourage people to be very careful about buying property. I caution people to be very careful about buying property for the sake of getting into property, because some of it you will not get any capital gain for a long time, and you're just going to sit there and do nothing with it.
It's a bit of a gamble.
Yes.
But at the same time, generally better to do something than nothing, because if you do nothing, you've got no chance of doing anything.
Generally, yes.
Now, talking about some of the other laws, Victoria's changed the laws on underquoting. Do you want to explain what they've done and if it's going to make a difference?
You know, I don't think it will make any difference, because most of it, when you look at what's happened out in the marketplace now, there are still situations, you see it, as I mentioned earlier on Facebook, where agents are talking about, I got this much more for the vendor, and the reserve price was this, and we got that. Look, if the agents really knew, seriously, they'd be investors themselves more than they are selling investment properties.
Because, I mean, half of it is, I think, the agents, some of them not doing the right thing, but the other thing is on good properties, you really don't know if there's another two people
and the majority
bidding,
of agents operate very professionally, Chris, and it's always like that small group that want to move ahead a little bit too quickly in the wrong way. And again, this is a classic example of legislation that has been brought in well after the effects of the boom that caused it are starting to fade. And here we are again, we've got this legislation that really won't mean a lot in time to come, because real estate agents will be boasting all around the world in a year's time about getting $1 more than the listed price, as I see it, you know, when we come back into the real estate world.
Now, we've got a few things to cover. One thing I want to cover now, in case we lose out of time, 400 grand. So tell us this competition. So someone could win 400, or someone has won $400,000.
Look, it was a really interesting exercise. It was absolutely for us to get more business. You know, some people post on Facebook, oh yeah, you're giving people who already own a property another property. You know, but
we've got the winner on the screen here.
It was totally commercial. It was totally commercial, and Brian and Julie Giddings won the competition, and I actually have the bank check. I do have the bank check.
Because their choice was they could either get a free 400 grand apartment.
They could.
Or 400 grand in cash.
That's correct, because the apartment's off the plan and it is still not constructed, so they could wait for it to be constructed, or they could choose to take the 400,000. And what happened was that over the last 10 months, anybody who transacted business with Century 21, whether they were a buyer, a seller or a landlord, automatically were entered into the competition. And on the day of the competition, our system, our web-based system, scanned through the names and pulled out a name, and people had to qualify.
And it wasn't me.
No, and it couldn't be you. It couldn't be a real estate agent. It couldn't be a real estate agent, full stop. So it had to be somebody over the age of 18, somebody who's an Australian resident. There are a number of things. And the first person that came out ticked the boxes immediately, and it was such a wonderful thing, because it's a gentleman and his wife, and I believe he's a 70-year-old gentleman, sold their macadamia farm that they've been working their guts out on for years, and this was their plan to retire. And they hope to raise some more money to give to their children to buy properties in Sydney. So if the children are listening, Chris, they should know that Dad said he's going to give you some money. But let me show you the cheque, if you don't mind.
Let's have a look at $400,000 cheque.
Whoops, there it is. There it is. I'm going to zoom on it. But,
so can I scrub it out and write to cash or to Chris Gray?
This is the actual bank cheque that I'm flying up to Ballina, sadly, for only about 30 minutes at the airport to meet with the people. And
good on.
The,
400 grand has certainly changed
but a well-deserved story, and we're very proud at Century 21 Australasia to be able to be in a position to give somebody a chance to win an apartment to the value or cash $400,000.
So just like the property market, you've got to be in it to win it. Well, moving on, our property of the week is brought to us by Danny Bernardo from Sydney Sotheby's, and as Tom Panos is still sunning himself away somewhere in the world, I'll take you through the details. So we've got a property this week at 64 Lamrock Avenue in Bondi Beach, 2026. We've got a 4-bedroom, 3-bath, brand new designer home with parking for 2 cars that's just 400 metres walk to the beach. It's spacious and has got plenty of accommodation across its 3 levels. It's got an innovative and contemporary design with high-quality finishes and workmanship. Now, the property is located in a quiet, wide part of the street in a convenient central location to shops, cafes and restaurants, and it's a pretty unique type of property in Bondi, having a 4th attic room, double parking and a pool and the beach around the corner. Now, the price guide on this is $3.25 million and the rental guide is $2,700 a week, and it goes to auction this Saturday, 13th of May. So maybe suit a home, an investment, or maybe a little holiday house, depending on what you've got. Now, just before the...
That's cheap rent. There you go. You should move. That looks really good.
Exactly.
Yeah. Wow.
Before we go, budget. Any thoughts on the budget tomorrow?
No, I think they're going to lay something down to try to encourage the first home buyers and keep the property market at bay. But I don't think that there's a great deal that hasn't already been leaked out that we know about. There shouldn't be anything that would surprise us. No, I honestly don't think that they can do anything for the housing market, because if that's what we're talking about, I really don't think they can do much. And I'm not sure that offering couples a second area to save money in prior to being taxed as a way of saving for a deposit, because there's another side of politics that says, why would you stimulate an already overstimulated market?
Yeah, and I guess it's trying to go for certain segments. And look, I'm not into all of these things of getting an extra few cents in the dollar on your savings. But for some people, though, it can give them the kick up the backside to actually get them to do something.
It can,
and that's what I think at times is
so long as they don't jump out into the marketplace right now, because the market needs a slowdown.
Yeah. So certainly we'll wait and see what happens.
Thanks very much.
Good to see you as always.
Thank you.
Thanks for joining us this evening. Until next week, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.